Welcome to The Explainer. Today, we're opening up the modern financial playbook. If you've ever stared at dense IRS or CFPB guidelines and felt like they were literally designed to confuse you, trust me, you aren't alone. We're going to translate that bureaucratic maze into a plain English, documentary-style roadmap for your money.
So, is your financial house actually in order? You know, it's so easy to assume that if the bills are paid, you're untouchable. But true financial health requires a bit more than just crossing your fingers and hoping for the best. Let's cut through the noise, bust some seriously pervasive money myths, and look at what the federal government is actually looking for.
Okay, let's dive into this. Here is our playbook for earning, planning, and protecting. Section 1. Managing gig economy taxes. Section 2. Assessing your daily spending. Section 3. Demystifying your credit score. Section 4. Avoiding abusive tax schemes. And finally, Section 5. Your financial action plan.
Section 1. Managing gig economy taxes. The truth about your side hustle.
Let's bust our first massive myth right off the bat. The idea that side hustle money just magically flies under the IRS radar. The actual reality? $400. Literally, if your net earnings from gig work or self-employment hit this incredibly low threshold, you are legally required to file a tax return for it. Weekend side job, part-time gig, doesn't matter. The IRS expects to hear from you.
And here's where a lot of folks get tripped up. Look, as a W-2 employee, your boss handles the heavy lifting, right? They withhold taxes straight out of your paycheck. But as an independent contractor, you are a business of one. The apps and platforms aren't saving you from taxes. If you wait until April to settle the whole shebang, you'll get hit with underpayment penalties that will completely devour those profits you worked so hard for.
See, the IRS wants its money as you earn it, not just all at once at the very end of the year. So they break the year into 4 payment periods. You owe estimated taxes on April 15th, June 15th, September 15th, and January 15th. Seriously, mark these down on your calendar. Staying ahead of this quarterly rhythm is exactly how you avoid getting blindsided by a massive, penalized tax bill. Now, by January 31st, you need to keep a sharp eye on your mailbox. Depending on how you got paid, you might see a 1099-K, maybe a 1099-MISC, a W-2, or a 1099-NEC. Oh, and here is a pro tip straight from the playbook. Keep absolutely impeccable records of your expenses. Save every single receipt, because deducting legitimate business expenses is hands down the smartest way to legally lower that final bill.
Section 2. Assessing your daily spending. Preparing for big financial moves.
All right, here is a heartbreakingly common myth we need to crush. Thinking that once you decide to buy a house, your credit is just locked in. Whatever you do, avoid getting into new loans before you buy. People prep for a mortgage and then, out of nowhere, decide to finance a new car for the driveway or open up credit cards for new furniture. The CFPB warns that doing this right before applying can dramatically spike the interest rate lenders offer you. Just put a total freeze on new credit.
But first, you need a brutally realistic view of your daily spending. The CFPB recommends 3 simple steps here. 1. Review the past several months of your statements. 2. Categorize your expenses honestly. And 3. Compare that to your monthly take-home pay. And I really want to emphasize the word honestly here. If you spend $300 a month on takeout, write down $300. Don't edit reality to fit what you think you should be spending, or you're going to end up house poor.
Section 3. Demystifying your credit score. Your ticket to lower interest rates.
Now, what's really interesting about this next point is that it dispels one of the most pervasive financial myths out there, the idea that checking your own credit reports actually hurts your score. According to the CFPB, this is completely 100% false. Checking your own credit is processed differently than when a lender checks it. It is completely safe. So follow this 4-step checklist. Get a free copy of your reports. Check them carefully for errors, because those can mistakenly drag your score down. Get your actual scores, and really understand how they work.
Let's connect this data directly to your wallet. If your score is up there in the mid to high 700s, you unlock the absolute lowest mortgage rates available. Drop down into the 680 to 740 range and your rates tick somewhat higher. But if you fall into the 620 to 680 bracket, you're going to pay the highest rates with the fewest choices. Over the life of a 30-year mortgage, that difference literally equates to tens of thousands of dollars. Protecting that score, it's non-negotiable for sure.
Section 4. Avoiding abusive tax schemes. Protecting your wealth from predators.
Let's talk about a very dangerous myth. The idea that some magic legal document can just make your taxes disappear. The IRS is currently heavily targeting the abusive trust tax evasion scheme. Basically, these are fraudulent arrangements that ignore basic tax rules to illegally hide income or write off personal expenses. Let me be crystal clear. In the eyes of the IRS, substance over form controls taxation. You can't just slap the word trust on a bank account, keep using the money for your personal expenses, and pretend you don't owe taxes. They will see right through it. No way around it.
These schemes also try to trick well-meaning people with fake charitable write-offs. But the concrete IRS rule is this: a genuine charity must actually benefit in order for you to claim a valid charitable deduction. Setting up a fake foundation, donating to yourself, writing it off, and then using that money to pay your kids' tuition, it simply doesn't work. The penalties are incredibly severe, so steer clear of predators pitching things that sound way too good to be true.
Section 5. Your Financial Action Plan. Putting it all together.
So the crucial point is bringing all this together into a cohesive strategy. Here's your rapid-fire summary. 1. Track every dollar of your gig earnings and keep those expense receipts. 2. Pay those quarterly estimated taxes to dodge nasty penalties. 3. Before you buy a house, freeze new credit and assess your spending honestly. 4. Check your credit scores for free and fix any errors. And 5. If someone pitches you a shady tax evasion trust, report them to the IRS using Form 1464-2. I want to leave you with the provocative thought today. If the IRS audited you tomorrow, or if you found your absolute dream home and had to apply for a mortgage in the morning, is your financial playbook actually ready? Don't leave your hard-earned wealth up to myths and assumptions. Track those expenses, check that credit, and secure your financial future. Thanks for joining me for this explainer.